Hello everybody and welcome to my monthly Vietnam update. In August, according to internal estimates, the fund declined by minus 3.6% and simultaneously the VN index declined by minus 1.6% in US dollar terms. That's mainly because the Vietnamese dong weakened by around 1.7% versus the US dollar. But the VN index managed to close above the crucial 1,200 level at 1,224.05 points. It's essential to note that the index correction witnessed in August, subsequent to a robust surge in July, is essentially a normal technical correction bearing no relevance to macroeconomic factors or enterprise earnings. Hi. My name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. August's market dynamic were notably influenced by two significant factors, namely Vingroup, or in short VIC, stock performance, and speculative activity surrounding real estate stocks. VIC, a significant index contributor with an index weight of around 5%, surged by over 50% in mid-August, propelling the VN index higher by around 2.5%. This surge was fueled by VinFast, Vingroup's electric vehicle subsidiary, which ventured into the US stock market via a SPAC listing on 14th of August. Despite VinFast's substantial historical losses, its valuation soared beyond $200 billion by the 28th of August, a remarkable feat. This surge triggered heightened trading activity for VIC, driven by the belief among local retail investors that Vingroup's 51% ownership of VinFast would amplify VIC's market capitalization. Nevertheless, VIC's valuation currently at approximately 44 times its earnings is notably high. VinFast's role as a trailblazer in the electric vehicle sector doesn't erase its recurring annual losses, reaching $2.1 billion in 2022 and accumulating to an overall loss of $5.4 billion. Interestingly, VinFast's stock journey experienced twists. Its rapid ascent was marked by a significant correction in the final trading days of August, with a stock price plummeting from a peak of $93 on the 28th of August to a closing price of $34.71 by the end of August. Despite this correction, VinFast's market capitalization remains substantial at $80.6 billion, surpassing established automotive giants like Mercedes-Benz, BMW, and Volkswagen in size. A considerable portion of the VN index outperformance can also be attributed to a speculative activity surrounding real estate stocks. In August, retail investors, often influenced by media and social networks, poured substantial capital into speculative real estate stocks. The prevailing sentiment was rooted in the belief that decreasing interest rates would bolster the real estate sector. This surge affected several real estate stocks, even those grappling with substantial losses and default situations. A prime example is Novaland, or short NVL, Vietnam's second largest real estate company, which skyrocketed by 38% in the last 2 months, despite reporting substantial losses of more than 1,000 billion Vietnamese dong in the first half of 2023. And which auditors had substantial doubts about a going concern. This phenomenon extended to Phat Group's PDR, a company unable to fulfill its bond obligation and operating with a plummeting revenue. In the last 2 months, PDR's stock price soared by 48%, despite dismal financials leading to an inflated trailing PE valuation of 69 times. Unfortunately, such speculative trends with the sector persist despite fundamental challenges, with 55 gainers among the 65 real estate stock listed in the same period, despite the corresponding decline in the sector's earnings. The outlook for the real estate sector remains uncertain, and the full recovery appears to be a matter of time, likely spanning around 2 to 3 years, despite the sector's recent buoyant stock market performance. The persistent high level of bad debts originating from the real estate sector within the banking system further underscores the existing challenges, with no definitive signs of recovery thus far. This scenario of speculative surges triggered market volatility echoes our experience in the past, notably in 2018. During that period, local individual investors heavily allocated funds into overvalued index heavyweight stocks, propelling a substantial surge in the VN index. However, this was followed by a sharp decline in 2019, illustrating the potential pitfalls of speculative trends. While we acknowledge the potential continuation of this trend, we opt to avoid it, given our historical observation. Instead, we concentrate on investments in recovery sectors such as export companies. Over the past quarters, we have noted a downturn in the export sector due to inflationary pressures in the US and the EU, impacting industries like furniture, seafood, and garments. However, signs of recovery emerged in the second quarter of 2023, with August marking a narrowing decline in export revenues, reaching $32.4 billion, increasing 7.7% against July, reflecting a year-on-year decline of 7.6% compared to 13% in the first half of 2023. Additionally, the prospect of an upgraded strategic partnership between the US and Vietnam, as hinted by a Reuters article on the 19th of August 2023, may significantly bolster Vietnamese economic growth in the coming decade. The existing comprehensive partnership between the two nations, signed a decade ago during President Obama's visit, has proven instrumental in driving Vietnam's export to the US from $19 billion in 2012 to a staggering $109.3 billion in 2022. Moreover, we anticipate the positive impact on foreign direct investments, FDIs, from US allies like South Korea and Japan. These nations, pivotal US partners in the Asia-Pacific region, have heavily invested in Vietnam since the comprehensive partnership was established in 2013. Notably, South Korea investment has surpassed $60 billion through several large projects. Given these considerations, we have chosen to focus on export-oriented companies in our portfolio, including MPC, PTB, LTG, TNG, and VGG. Despite enduring challenges amid weak US and EU consumption and consequent profit declines, we see the potential for a recovery in the second half of 2023 and 2024. Furthermore, if the US-Vietnam partnership upgrade materializes, these companies' prospects over the next decade appear promising. Presently, these export firms are undervalued, trading at an average PE ratio of 10 times due to their substantial profit dips in the first half of 2023. As the profitability recovers, the valuation is anticipated to reduce to an appealing 5 to 6 times earnings, representing a compelling investment opportunity. In a notable departure from the US Federal Reserve's aggressive interest rate hikes since March 2022, several emerging economies, such as, for example, Vietnam and China, have embarked on a rate-cutting cycle. to stimulate their economic growth. This trend reflects a broader global shift in monetary policy as developing nations proactively tackle inflation rather than awaiting signals from the Fed, European Central Bank, or the Bank of England. What sets the cycle apart is its unprecedented breadth. Over the last 2 decades, instances of policy easing in select emerging economies, while the Fed maintained a tightening stance, have often resulted in positive outcomes for equities in these developing nations. This stands in contrast to the previous norm, wherein Fed policy largely dictated market dynamics. The Federal Reserve's latest hike in July pushed the benchmark overnight interest rate to a range of 5.25% to 5.5%, with the possibility of another increase in September. Yet, emerging economies have adopted a divergent strategy. Vietnam, for example, has proactively reduced interest rates in response to diminishing inflationary pressures and will probably continue to do so. It is interesting to note that emerging and frontier markets are increasingly navigating their economic trajectory independently of the more established central banks. The evolving landscape in emerging economies underscores the increasingly dynamic and interconnected nature of global financial markets. Well, this was all from me. Thank you very much for listening, and you're going to hear from me again next month with another update. Thank you and goodbye.